Hey, what's up guys? This is Adam back from Adam Reviews. Today I wanted to show you guys how to go into the charts when you're using kangaroo tails and how to not lose money on the kangaroo tail indicator, because it is possible to lose money if you're not doing this properly, if you're not following all of the rules that I've found that have helped me when I'm trading kangaroo tails to find the good moves and to minimize losses. Obviously that's the point of what we're trying to do. We're trying to make a profit here, so it's very important. There's a few different things that you can look for when you're looking at the charts to determine whether or not a kangaroo tail is going to work out or not in your favor. And it's not 100%, obviously, neither is any other strategy that's out there, but I think it's a very powerful indicator, and when used in conjunction with other things can be very successful with it. And I'm not trying to give you financial advice or tell you what to do with your money, and I'm definitely not telling you to put in money that you can't afford to lose, because you can lose money very quickly, just like you can make it very quickly when you're trading indices. So obviously be very careful with your money, and don't ever put any money into a broker that you can't afford to lose, because over 90% of people, I don't know what the exact number, probably over 95% of people that get into the market do lose money. So whether or not you have a good indicator, you still have to be careful. So here's some things. I'm just going to go back over US 30 over the last couple days or whatever, and I'll just show you the rules that I've found that work for me, that help me minimize my losses when I'm trading kangaroo tails. So let's go into the charts here real quick. So the first thing I look for when a kangaroo tail pops up, because obviously you get the signal, you'll hear the alert or whatever, and you'll get excited and you'll want to get in because you can see the power of kangaroo tails. You see how they work a lot of times, and sometimes you will miss moves because you follow these rules, and it happens. You won't always get every single move, and don't, if it already starts dropping a crap ton, and it's already going in the direction, don't FOMO and just like hop in it just because you're like, oh man, I don't want to lose out on this move. You got to be smart about it. You got to catch it when it happens. And what I like to do is follow these rules. Part of it is, what does the next candle do? So you'll see that kangaroo tail indicator right here. We've got the green where this circle is, or where I'm circling. Okay. This kangaroo tail, the next candle, if it doesn't actually go above it and close above that point, or like if it was a bearish candle, if it didn't close below that point, you want to make sure it closes, not just that it goes under it, because sometimes it'll fail because it'll go under it and you'll be thinking, oh man, this looks perfect, it went under it, and it doesn't actually close. So this is like, we're looking at the 5-minute candle. You could be also looking at the 1 minute, but we're just looking at the 5-minute right now. So you can see where some of these failed. Right here, here's two. This one, the first one that came up, the next candle did not go above it, so we know it's not going to change direction. You have to make sure to confirm it with that next candle. Same thing on the next one. So those would have failed, but obviously you wouldn't have gotten into those if you're following the rules that it has to close on, the next candle has to close in the opposite direction. So like this one right here, it closed below it here, you can see. So this one I would have stayed out of, and obviously this one failed. But when you see that indicator, you're like, man, you get on the computer, you're like, you don't want to be sitting there all day. Finally get, you might be waiting for like an hour or something, or 30 minutes, and you haven't gotten any kangaroo tails, and you're like, oh man. And then you see it and you're just like, oh man, I don't want to lose out on this move, and you hop in it, and then it fails, which really, you're putting you're putting your stop loss at the bottom of the candle. So hopefully you're not losing too much. You're hopefully only losing, you're trying to only risk a couple percent, maybe 1%, 2%, 3%. If you're feeling lucky and you want to be, you can do more, but that's on you. You definitely can lose a lot of money very quickly if you're not careful. But like this one here, it didn't actually close above it. So, you might have gained, 200, 300 pips for a minute, and then it dropped down. So if you tried to stay in this long term, that one would have failed. But it also, like I said, it didn't close above it. It went above it, but it didn't close above it. So like this one right here, the next one did close. It did pop down about 400 or 500 pips. That'd be a good place to close. I mean, I like to let them run a little bit longer sometimes, but it depends. But I mean, 500 pips right there, it did come down, and the next candle did close after. This one right here, it did not close above it, so that was not a good one to take. Same thing here, it didn't close above it. Right here is where the kangaroo tail happened and closed. It never actually on the next candle went above, but this one, it still would have been a good trade. Not this one, the second one. That one did go up about 1,000 pips. I wouldn't have actually gotten in that one because the odds are that it's going to fail if it keeps going down, if it doesn't actually close on the next one going back up. So this one, same thing, it didn't close, so you wouldn't have gotten in that trade. Same thing here. So this is how you can see how a lot of these will fail if you take them, but you have to be careful Like this one, it didn't, the next candle did not close above it, and it would have hit your stop loss right here because you would have put it at the edge of the candle. It would have hit the stop loss and then popped down, which would have been extremely frustrating. This one, it would have failed, you know, so you wouldn't have gotten in that one. So that's a big part of it, is just let's find one that actually worked well. You know, this one right here, it went above it, or I'm sorry, it went underneath and it closed, you know, and then that one popped down. You know, it ultimately went 1700 pips if you would have held that. You know, this one right here, same thing, it did go up 750 pips, and the next candle did go above it and close. So that's a good thing to look for. Another thing you want to look for is there room to the left? Let's see if we can find another example here. Okay, so here's one. You want to make sure that there's not, like, that price hasn't been there in a while. So what we say is room to the left. So like this one has a lot of room to the left. There's not, the price hadn't been there in a while, and this would have ultimately been, you know, right out. It might have hit your stop, but your stop might have been right at the edge, and if it was, it wouldn't have hit that, and then that would have popped up 350 pips. So we'll see what happens with that. That could ultimately go pretty high. This one went pretty well. You know, there's room to the left. The price hadn't been there in a while, so that's another good thing to look for, is if the price has been there in a while. Now if it hasn't, sometimes it'll fail. Like this one, there's not a lot of room to the left. Right here, the price had been there, and so you can see this one failed. That's two things that are major that you need to look for. Here's another thing that I like to watch, is the MACD at the same time. You can usually see how the MACD will get really high when it's about to come down, or really low when it's about to go up. And it doesn't always work that way, but you can kind of see how it corresponds. Like this point, it got really high, and then it came back down because it had to get back to even. You can kind of see how that works. It doesn't always work perfectly, but that's another thing to confirm whether or not you should get in it. So like right here, there's room to the left. The next candle, actually this candle didn't even close there, so I might not even have gotten that one. That one's close though. That one's close, because it didn't close where the kangaroo tail was. I mean, but then the next one did. Sometimes I'll get in a little bit late. You know, I'll let it go 2 candles, but most of the time I try to stick with the one. So that's another way to, you know, the MACD and everything is another way to check to see if it's going to actually work. That's basically the 3 ways that I try to make sure that I minimize my losses when I'm trading kangaroo tails. And, you know, as you can see, it's a very powerful strategy. It works for, I like using it on a lot of indices. Some people like to do Forex. I don't do Forex as much as indices, but it is a lot of fun to trade it, and also like Bitcoin and stuff as well. Make sure to go to my website, kangarooguide.com, and subscribe to this channel, like this video if you want more content like this, and I will have another video for you guys soon. Thanks for stopping by. Have a good rest of your day.